We get asked all the time, what determines the interest rate on an SBA loan? Now, the interest rates on SBA loans start with the Wall Street Journal prime rate. And the best way to figure out what that rate is, just go to Google, type in WSJ prime rate, and you'll get like one of the first searches it'll show you. Today, as I'm recording this, that rate is at 8.5%. And then lenders take that rate and they charge a spread over that prime rate to compensate for the risk of the SBA loan. Typically, that spreads between 2.5% and 3%. Or in bankers' terms, 250 basis points to 300 basis points over the Wall Street Journal prime rate. And that's where you might hear the phrase prime plus 300. So if a particular loan is at prime plus 300, then that means today the interest rate is 11.5%. And that's typically what you're going to see on deals. Typically, most are going to be between 11 and 11.5. I'd say majority are at 11.25%. The most common that we see is plus 275, so plus 2.75%. Now the rates are variable, so throughout the life of your loan, they're going to reset every quarter. And that prime rate is driven by the federal funds rate set by the Federal Reserve. So when you hear on the news about the Fed possibly raising or lowering rates, that's going to have a direct impact into that Wall Street Journal prime rate. So typically the Fed moves in quarter percentage point increments, so 25 basis points. So typically if you hear someone say we're expecting one rate cut out of the Fed, it means they're expecting that they're going to lower rates by 0.25%. So that means that prime rate would go from 8.5 to 8.25.